Hello, and welcome to the stock-specific class here for Thursday, January the 13th. Again, if you have any questions throughout the week, please make sure you send those to jerry@traderspro.com. Let's get started by taking a look at market conditions. Not really a whole lot to add to Tuesday's market update, but I do want to emphasize a couple things since we are selling off a little bit today. But I mean, as far as the direction alerts, we're not in any overbought condition. Momentum's in the middle, breadth in the middle. I think it's kind of important to point out that sentiment again is in the extreme area here. Now it'll probably back off a little bit. But it's elevated, which means again there's really not a lot of fear of any sort of a correction. Buy sell ratios, we're not in any sort of extreme area. Sentiment, not in any sort of extreme area. We take a look at charts here. On Tuesday, I really emphasized this bullish reversal we had on Monday, okay? And I still want the focus to be there if this selling today ends up getting worse, okay? It is a little bit concerning that the selling today and where we halted yesterday, we did try to move up a little bit yesterday, but it's all kind of halting right in this area right here where we've had some resistance in the past. So if we can break out above there, that would be a good bullish sign that things are probably okay, that should still work our way back up. One thing I talked about on Tuesday was that I expected the market that this would hold as a bullish reversal and that we would eventually break to a new all-time high. I think it's important to point out that I didn't mean that it should go, that it's going to go straight up, or it did do that back here where it went straight up to a new all-time high, but that's not typical. Typically, you're going to have a few days where you pull back a little bit or you pause. We had a little bit of a pause day yesterday. Today we pull back a little bit. I don't see anything in the chart right now that would say, well, we need to start selling. We need to be getting out of everything. That is down here. That's if we break below here. So this tells me that we could even have another down day tomorrow, come back down even further. But if we do go below this low, and really if we start to get really close to going below that low, that's when I would want to start selling and maybe getting out ahead of this thing, because we could possibly be in a much larger correction at that point. So again, I don't see anything to panic yet, we shouldn't be panicking anyway, but I don't see anything to be overly concerned with yet. We'll let everyone else panic, and they'll start. This is the panic area down here, but we, like I said, nothing I see right now. Just from the direction alerts, we're not in any sort of extreme overbought condition. I am a little concerned that the sentiment is a little elevated, that a little bit too complacent. The market's a little bit too complacent, but I don't see anything to be other than that would indicate that this is going to get worse. Now, same thing with the Dow. Still looking at that same low. NASDAQ, it's hit pretty hard today, over a 1% drop. Again, we got to pay attention to that low. And then on the Russell, I pointed that out a number of times. We've got that major support area. I might have a few new people that are joining in today, so we're watching this kind of trend line right here at about 210. If it breaks below that, hasn't broken below that for over a year. For about a year or so. I guess it's back here in February of last year. It's been just moving sideways, but if it breaks that would be pretty significant. So, and again, this is something that I'm not the only person in the world that's recognizing this or showing this. Anyone that knows how to read a chart or look at a chart can see this, and so that's what happens. It becomes a self-fulfilling prophecy. Everyone's seeing that this is significant. It breaks below that. In your mind, you're thinking, "Boy, I'm out ahead of everyone else. I'm seeing something that nobody else is seeing." But in reality, everyone's seeing the same thing. They're doing the same thing. As soon as it breaks out, everyone's selling, and but that's the key area there that we want to pay attention to. Now, because we could see a major shift, and it is possible that we do end up breaking below that low. I don't know that I would be overly aggressive with getting into a lot of new trades. One thing I did want to point out today, before we get into some specific stocks, I've talked about this before, but it seems a good time to kind of go over it again. Going back to the S&P chart. Oh, before I do that though, I did want to point out the chart of bonds, TLT. One thing we'd like to see is the TLT chart move up a little bit higher. That'd be a little bit more bullish for the market. If we could see those bond yields come down a little bit. I know the market has really been reacting pretty strongly to the changes in the bond yields. Oil continues to move higher, about to break out to new highs. The dollar did have a little bit of a dip yesterday. It came way down. We were talking about how this is in the sideways range. Sometimes in these sideways ranges, you'll get this little, you'll get kind of a flush out move. A little bit of a bullish reversal candle today at this kind of previous area of this previous breakout area here. If we're still bullish on the dollar, it should rally off of that low. If it starts breaking down below here, we'd have to look at a possible trend reversal. Now, it's usually pretty rare to drop down from a kind of a sideways move like that. I talk about this all the time. That it can happen, but it's usually pretty rare. It isn't usually all that rare to get one of these little out of these little sideways moves to get this little, like I said, a quick drop that reverses pretty sharply. So we'll see if that ends up playing out that way over the next few weeks. It'll be time. We'll probably have to keep, that'll probably take a few weeks or so if it recovers from that little dip. And again, it's possible it could continue to move lower there. That's something else we'll look at. VIX moving up a little bit today with the market sell-off, but still nothing to be overly concerned with. Chip stocks, again, they're still in that sideways range, taking a little bit of a beating today. And Bitcoin was really down quite a bit today, and that could. And the market isn't really focusing so much on Bitcoin. It has in the past at times, but that's just something to point out today, is that had a little bit of a sell-off. All right, so what I was going to talk about before I get into the specific stocks is going back to this S&P chart. What if we break below these lows? What can we do? Now, obviously, we wouldn't want to be in a lot of stocks. We'd want to be in a more of a cash position. We want to make sure that when the market sells off, we want to have cash available when it bottoms to get back in, because then we're going to make a killing as it starts trending back up again. The reason why people don't always buy low, sell high is because they tend to buy high and then they miss all the signals when it starts to sell off, and so they end up selling off when they have to. Their account gets obliterated, and they're buying high and they're selling low. So we want to make sure we have cash available so we can buy low. And but what else can we do besides just sitting in cash? Well, this isn't the greatest strategy to use, but it is one that you could make a little bit of money if the market starts to drop. And that is that there are available these inverse ETFs. I've got a little watch this right here. The SH is short the S&P 500. The DOG is short the Dow. SH, DOG, and the PSQ is short the NASDAQ 100, and the RWM is short the Russell 2000. Now, what does that mean? Well, if the market drops, there's one way that you could profit. Well, there's two things you can do. You can just get out and go to cash, or you could short the market. Now, a lot of people don't like to short. It is riskier than buying stocks because you're borrowing shares. When you short a stock, what you do, just a real 10-minute or 10-second explanation is let's say you have a stock at $50 and you think it's going to drop down to $30. Well, what you can do is you can borrow the shares from your broker, and you could buy, or you could sell them first. You're selling first, so you're borrowing the shares and you're selling first. So I'm selling 100 shares of this $50 stock. So I'm selling for $5,000. Now, because I borrowed those shares from the broker, I've got to replace them. I've got to buy them back and give them back to the broker. What I'm hoping for is that stock drops down to $30 and I can buy those shares back at $3,000 and give those shares back to the broker, and I get to keep the difference there. I sold at $5,000, I bought back at $3,000, and I made a $2,000 profit. That's what I'm hoping for when I short a stock. Now, the danger in shorting a stock is that the stock could go high, continue to go higher. It could go against you. Then maybe it doesn't drop, and it goes to, let's say, $70. Well, I still got to get those shares back to the broker, and so I'd have to buy them back at $7,000, and now I'm losing $2,000. Now, the main difference that you say, well, what's the big deal? What's the difference here? Well, the difference is that because those shares are borrowed, the broker's not going to let the stock go against me, because it could be infinite that it could go against me, right? It could go up to $1,000 a share, $2,000 a share. I don't have the money to buy back at that point. I mean, and so the broker is, in order to have this trade go against me, the broker is going to require that I've got that money in my account to be able to get his shares back. And if I don't have that money in my account, he's going to force the buyback of those shares to get it back. So he can step in and force that close of that trade and force the loss. I could lose everything in the account. And so there's on the other hand, when you buy a stock at $50, that stock can go all the way down to $1. Your broker doesn't care. You can, you've already paid for the stock. You don't have no obligation to the broker. So there's a different dynamic that goes into shorting stocks, and because of that, there's a lot of people that are uncomfortable with this process. They don't want to short a stock and take on that unlimited potential, unlimited risk. So there is a way you can still be long, meaning you can still buy a stock that's actually going to go up in value when the market goes down in value. And that's what these inverse ETFs are. The SH, when the market sells off like it is today, it's up today. Okay, it goes up when the market is dropping. And so what you can do is you can go in if you think there's going to be a big drop in the market. And this is the only time I would do this, is if I think there's going to be a big decline in the market. I don't want to just sit in cash and make nothing. I want to make something. I can go in and buy this at $13.74 or whatever. I can buy the SH and have it go up in value when the market goes down in value. Now, a key thing to remember, though, with this ETF is it's not a perfect hedge or whatever. It's not. The SPY right now is at $467 if I wanted to buy one share of the SPY. The SH is at what is it, $13.83. So you could have a big sell-off in the market. The market could go way, way down, and you might only make $1. The SH may only go up $1 or something like that. So it's not like you're making a ton of money if the market's dropping. And that's why I rarely use these, and usually I only use them if the market looks like it's going to get obliterated, really big crash. I want to make something. Well, actually, I will short things. I don't mind shorting things, so that's typically what I will do. But if I just have an account where something's sitting there and I want to be long, I want to make something if it drops. This is an option. This is something you can choose to do is to buy some of these inverse ETFs. Okay. Again, though, I wouldn't touch this trade unless that S&P breaks below that Monday low. All right. So let's take a look at some individual stocks, though. And again, these will probably just be sitting in the watch list for now. But under oil and energy, again, the oil sector is continuing to move up. Technology stocks are getting hammered right now, and so those are the ones that you probably want to stay away from. I'm not going to get into any of the computer technology sector right now, but I do like oil, and we have a lot of oil stocks in our watch list as it is. But DEN, Denbury Incorporated, 96 strength rank. Switches over to signals here. Again, it looks like it's forming this inverse head and shoulders pattern. How much I love the inverse head and shoulders pattern. There's your neckline. That forms there's where the neck is right there. I mean, this is almost a perfect inverse head and shoulders pattern. You could wait for it to start moving back up again. It's a little bit of an indecision day today. You could wait for a little bit more confirmation to get in. You could wait for it to go to a buy signal to get in. Buy signal would probably be up around here where it would trigger. You could wait for it to break above the neckline to buy in. You could wait until it breaks to another new high to buy in. Or you could buy some shares with a little bit of confirmation, add more shares when it breaks the neckline, add more shares when it breaks above the previous high. There's different ways you can manage that situation there, but that's a nice looking pattern there. Now, before I go into the next stock here, one thing to keep an eye on when you're in the sectors right here, the sectors are being ranked by their strength rank, okay, their average strength rank. When most of the stocks have very high strength ranks, right now oil stocks have a large amount of high strength ranks, or in the 90s there. But another thing that I look at is I keep an eye on buy-sell ratios. So you'll notice here that right now the buy-sell ratios of oil stocks 5-to-1, meaning there's 5 times as many buys as there are sells. Finance right now, it's 3-to-1. There's 3 times as many buys versus sells. Now, why is that significant? Well, remember, we're looking for 98 strength rank stocks. We're looking for high strength rank stocks that are in the hold range that could go from hold to buy. Well, when you have these higher ratios, it means there's a lot of stocks that are moving over into that buy range, and meaning that there's money flowing into those sectors. Who's buying those? We don't care. It's probably institutional money. It's the big fund managers and things like that are moving money into those groups. But I like to look for those high ratios, because it tells me that there's a lot of stocks that are going from hold to buy, and they're right on that verge of going from hold to buy. Computer and technology, I'm going to stay out of that one right now, because it's just the opposite. There are more sells right now than there are buys. If that can get up, so what do I use as a guide? Well, I'd like to at least have it be over 1. Okay, meaning I want there to be at least more buys than there are sells right now in that sector. So right now, retail, I'm going to stay away from retail. There's twice as many sells as there are buys. And you say, well, wait, that can mean that those stocks are bottoming out and they're going to start to rally back up. Well, that's true, and it doesn't mean that I won't take a peek at those. But here, think of the combination today. Today we're selling off. We're still close to a really key cliff here that where the market can really start selling off. I want to stick to quality today. If I'm going to find new trades, I want to stick to the best sectors, the best stocks within those sectors, good ratios, good buy sell ratios in those sectors. Now, what happens if the markets rebound? We start charging high. Let's say we go to new all-time highs. We're close to going to new all-time highs on the indexes. Well, if that happens, there's a good chance that a lot of these retail stocks, a lot of these holds will start going to buys, and that ratio will get up above 1 at that point. That's what I would like to see happen. There'd be sells that are going back to hold, and there'd be holds that are going into buys. That should get up there close to 1. And yes, these stocks could still be beaten down, but it would be showing me that there's enough money flowing into those, because I don't want to be it doesn't matter if I'm trying to get in at the bottom of a stock, because remember, what good is it going to do me if I buy a stock that's down waiting for it to go up? What do I need for it to start going back up? I need the big institutional money to come in and start buying those shares, because my 100 shares I bought didn't move the needle at all. It didn't cause the stock to go up. It won't cause it to go down if I sell it. I need those big institutions to come in and recognize this is a good deal. This stock is beaten up. It could go back up again. Okay. Now, you could just wait for those big institutions to find that stock that you found that you believe strongly is going to go back up. Or you could just go find the ones that they believe are going to start going back up. They are pouring money into them. They are starting to go back up. And go jump into those. Just follow what they're doing. I can't emphasize this enough. We really need to have the mentality of following what the professionals are doing, not trying to outsmart the professionals. I get it. I get it that you want to be able to go to your parties and brag about the stock you bought, or the stock you told someone to buy and it went from $10 to $50. They love you because you made them money. They love you because they think you're smart. I get that. That's human nature, that we crave that sometimes. We do equate stock market success with being smarter. Much like the same thing happens with gambling, that people that win in gambling are thought to be smarter than everyone else. And that's even more ridiculous sometimes, because they could just be on the luckiest of lucky streaks, and people equate intelligence with the outcome of some of that luck. We don't ever want to get caught up in that, where we're equating success in the markets with intelligence. And if that's what you're seeking, if you're in this class because you want to learn something that's because you're tired of being at the party and Bob is coming up with all these stock picks that work out, you want to be able to beat him at that. This is not the right class for you, because we're going to do the opposite. We're going to let the other professional traders find all this stuff. And we're going to try to be really good at recognizing what they're doing and trying to follow along with them. Okay. So I want to stay clear of these. Now, again, there might be times where I may recommend a stock within a sector. I'm not saying you can't. Okay, I'm not saying you can't find anything good, but typically you want to stick to what's working and stick to these sectors that are working and try to avoid the ones that aren't doing so well. And again, at the very least, I'd like to see that at one or above to show that there aren't more sells than buys within that group. So it's possible you could move down this list a little bit. Here in the aerospace sector, for instance, you've got a 3-to-1 ratio. Now, there's not as many stocks in this one, okay, and that can happen from time to time, especially like the transportation stocks and things like that. There's not as many. But in aerospace right here, let's take a look at the holds. Let's look at the best of the best within the sector. At the top, there's only one strength rank in the 90s, 95 strength rank here, ERGA. That's not a bad little pattern there. You've got kind of this V-shaped move. It was moving down, it's moving back up. You've got a higher low right here, went to a higher high right here. And it's down a little bit today, but if it can rally back up, it could give you another higher low. A little bit of an ABC pattern right here, maybe a little bit of an ABC pattern right here. You'd want that confirmation though, but if this can go back to a buy signal, that might be a good little trade there. That looks like a good little pattern there. So again, let's put this in our watch list. I don't think we have any aerospace in our watch list right now, so that'll be good. And let's put the alert on here to tell us when it goes from hold to buy. Now in that same group, there's aerospace right here. That was the only one in the 90s. This Textron is one I'm more familiar with, TXT, 86 strength rank. As you can see, this doesn't, I told you there's some sectors where they don't have a lot of high strength rank. That doesn't mean we have to ignore them completely. This is still a pretty high strength rank at 86. We can see if there's a decent pattern there. And actually, this one went from hold, it was at a hold. It looked like it's going to go to buy today. Now, this one's close to breaking out. You could wait for it to break out. That's probably what I would do. But I do like this consolidation right here. Had a nice little burst and then consolidated. It can break out. It can be a good sign there. So we can put this in the watch list to see if it can break out. And when you're doing your analysis too, like this, and you're putting stocks in your watch list, again, it doesn't mean we have to trade all these. It doesn't mean we have to trade them right now. What we're trying to do is continually have a list of stocks that we could consider. So if I see a nice trading day, the markets look good, we rebound from the sell-off today. Let's say that happens tomorrow, and I've got some cash, and I want to put some cash to work. I can go to I've already done the work, go to my watch list here. Here's all my stocks that have high strength ranks. Some of them might have already gone to a buy, but they might have barely gone to a buy signal. I could still get in them. I go and see if there's anything in that group, that I could get into, or that I feel like I want to get into right now. Now, sometimes when you're doing your analysis, you'll see something immediately in your that you'll want to jump into. But you'll notice in these classes, rarely are we getting into something right from what we're seeing. Where usually it's going to require some confirmation, waiting for it to go from hold to buy, and that's the purpose of kind of generating that watch list. Now, the watch list is getting pretty big. I try to go through and weed it out a little bit, kick some stocks out. I did that before class, and a lot of the ones that are in there right now I still like, and still want to keep an eye on. But at some point I need to start weeding through that, because otherwise you don't want to have it get to the point where you've got a 100 stock watch list. That's a little bit too much. These classes are all recorded. You can find them when they get posted. They're posted on the YouTube channel. So if you go to YouTube and then type in Traders Pro, they'll usually have the latest class posted when it's available, when it's ready. Usually it's a couple hours or so. But yeah, you can review the recording if you miss a live class. All right, so going back here under sectors, I think I did do DEN under oils and energy. I believe I did that right. We did look at that one, yeah, because that was an inverse head and shoulders pattern. There's one other sector where I found some trades, although a couple of them we already have in the watch list. I realized that afterwards. That's when your watch lists get too big as well, when you can't remember what stocks you have in the watch list. But there's a lot under construction right now, the construction sector. Now this one is below a 1 on the buy sell ratios there. So again, I'm not saying you can't look in there, but there's a couple of them that caught my eye just simply because I've traded before. And HOV was one of them, 97 strength. This one's already in the watch list, but look at the move it made. This is one that when it formed that pattern, I think I even mentioned this when I put it in there, that I was considering a possible early entry, maybe not quite waiting for it to go to a buy signal, because it was gonna take a little time to get there. In fact, it's right about to go to a buy signal. You can see right up here, very close. So I missed a good part of that initial move there, but that one looks pretty good, and looks like it would be a good trade once it gets to that buy signal. And then FIX, 90 strength rank here. We added this one in the watch list. I like this kind of consolidation through here. And that one's getting pretty close to going back to a buy signal. And then one new one, though, is this BXC, Blue Links Holdings, 94 strength rank. Got this little pullback right here. It looks like it's holding as a higher low right here. It's a little bit of a deep pullback, though, and just wait for this go back to a buy signal. It's been a nice little uptrend through here. And that's really all I found today, at least that's somewhat new. Like I said, I realized that HOV and FIX were already in the watch list there, but at least that's a few stocks we can keep an eye on. And like I said, today's class is going to be a little bit shorter, just because I didn't want to just rehash what I talked about on Tuesday. So if you missed the Tuesday class, just go and review that recording, and you'll hear a lot of analysis that I went through. That's usually when I'll do most of the market analysis as well, is on Tuesdays. The portfolio, again, we have a decent cash position here. I like the trades we're in. Let's go through that here real quick, and we'll wrap things up. Looks like LPX is going back to a buy signal here. Now, I think I stopped down below here. I could move it right below that low. That low is not that much higher than this one right here. So I think, if I remember right, I was going to wait till see if this thing can break out to a new high and then move it up. I just don't see the reason to move it up right now necessarily. It's not that big of a difference. If I was moving it from this low to this low, that'd be a pretty big difference there. but this low to that low is not that big of a deal. So I still can give this a little bit of room, because maybe it gets back up here and it comes back down, and you get kind of a sideways range right here that it gets in. So I'll wait to make that stop adjustment. LPI, this is an oil stock. Again, we're still getting higher highs, higher lows, still acting like an uptrend. Looks like it's kind of turning the corner here, starting to rally back up, well off the previous high. So there's still a lot of room for it to move up from here. Tesla went back to a buy yesterday. Sold off a little bit today. A lot of the kind of the riskier stocks. Tesla would be considered still a little bit of a riskier stock. Sold off a little bit today, but again, still looks okay to me. If this can start rallying up a little bit stronger, I think I have my stop down below here. I can move it up to this low, but I'd like to see us get closer to those previous highs up here before I do that. Not too concerned with the sell-off today, though. NSC, again, hoping that put in a low on Tuesday. I think the stop's below here, so we got a little bit close to that, but didn't get stopped. I can't remember if I put it down here, right here. But that one still looks okay. UPS hopefully that put in a low on Tuesday as well. I still love this pattern, though. I still think this one has a nice long-term pattern here that especially if it breaks out above these highs up here. And it's a stock that you're familiar with, which is kind of nice sometimes when you have some stocks that you're at least have a little bit more familiarity with what they do. CLR, another oil stock, again, looks fine. SM, another oil stock. We got a lot of oil stocks. So I don't really want to be adding. If you're wondering why I have a lot of oil stocks in the watch list that I'm not in, I don't have all oil stocks. Although, to be honest, that that it's the one sector that's been bulletproof. Seems like so far the last little bit. So, I think we already went over SM, right? That was the first one we went over. But I do have a lot of oil stocks in there. So I don't want to add anything, like I said, today. But tomorrow I may, if the market can rebound. It looks like it's not moving closer to that Monday low. Go through the watch list there and see if there's trying to think if there's anything I remember from going through the watch list. I can go through the watch list here pretty quick, so let me see if I find anything in here that's close. Again, a lot of these oil stocks, and it's just I don't want to add more oil. You know what? I need to boot some stocks. I'm going to boot GDN. Now, some of these have sell signals, but I'm leaving them in. I'll go ahead and boot this one out. GDYN. I still am going to keep BW in here because that still could be, it looks like a corrective pattern there. Now, some of these I'll keep in. SYNA I'm going to keep in because this looks like a nice larger ABC pattern right here. And now this would have to go back to hold and back to buy. You don't have to necessarily wait for it to go back to buy. I try to stick with the buy signal as an entry as much as I can, just because I'm trying to teach, especially people who are new and people that just want to keep the process simple. You can use that buy signal as a confirmation entry point. But once you get comfortable with recognizing these patterns. If this is an ABC pattern right here, if this thing goes back to a hold signal, has a nice strong up day, it goes back to a hold signal, I don't have a problem with you getting in and then putting a stop probably right below that low. You'd want to have a stop. This is where I know I was wrong. You always want to try to put your stop loss where you know you're probably wrong. Maybe you're a little bit early on the entry by not waiting for it to go to a buy signal, but if you're willing to take that little bit extra risk, that this is an ABC pattern that's going to end up breaking out and going higher. Again, as long as you identify where you're probably wrong, and if this thing were to turn around and come back down and go below that low, okay, well maybe this isn't an ABC pattern. Maybe you're in a downtrend now. Now that's a lower high, another lower high, you've gone to another lower low. If it dipped below that low right there, it's acting like a downtrend. Okay, get out. I still would think that risk you're taking is worth the potential reward if it breaks out and goes higher. You'd have a chance to make a lot more money if you're right than you would lose if you're wrong, and that's what we're trying to manage here is make sure that we're following that process. So I'm going to keep this one in. This one still looks corrective. I'm going to keep that one in. This one was based off of this being the ABC pattern right here. I thought this thing was going to head back up. This is an example of, if you did wait for the buy signal and never gave you the buy signal, now it's rolling over. Maybe it does end up dropping below this low. If it goes down too much closer to this low, I'm going to go ahead and toss this one out of the watch list for now. It should have been working its way back up to those highs. It's still possible, though, that this could put in a higher low and it could rally up to where that goes to a higher high right there. That may be the reason why I go ahead and keep it in. But this was on the hot seat of getting booted out. You know what? I might boot this one out too. I kept it in because this looked like it was corrective and looked like it should start moving up. I also don't want to be in a stock that's going sideways forever, and it already went through a long sideways move here, and I don't want to. So let's boot out HM, HC. Do that after we're done. The XYN, this one's still okay. Let's keep that one in. NVIDIA. Well, I've been waiting to get into NVIDIA, but it had a sharp reversal today. But I'll keep that one in there because I still would like an entry point in NVIDIA if I can. SM, AR, USO. Yeah, I'm going to take USO out just because I had this one in because if you just wanted to trade oil and didn't want to look at individual oil stocks, you could just buy USO and buy the ETF. This has had a buy signal for a little while, and I'm not planning on getting it. And if it pulls back, it'll show up in my scans, and it'll give me another chance to get in as well. Or it's something we look at each week when we go through the market updates. So I'll go ahead and boot that one out just to create a little bit more space in our watch list here. FIX, DFIN. Again, I'm keeping this one in because this could just be a deeper ABC pattern here, but if it rolls over again and drops lower, I'm booting that one out. GRNS looks okay. Wire looks okay still. MEG, again, this could be a larger ABC, this larger move up. But again, that's got to be the low there. If it dips to another low, I'm booting that one out. HOV, CEIX looks good. I'm gonna boot out Boot Barn. I got to boot out Boot. Just because I know it's got a sell signal. It'll show up in the list. It shows up in the scan, in the retail sector scan quite a bit when it's performing well. So I'll see it again if it starts recovering. SIG, CLFD, RCMTL. These look all right so far. HSON, STX, SNPX. And then these are the ones we added today, ERJ. All right, so let me go back to that watch list, and we're going to boot out HMHC, USO, and boot barn. We're going to boot out boot. All right, that's it. I'm going to dismiss class early today. All right, have a great weekend. We'll see you on Tuesday. Again, if you have any questions during the week, just send those to jerry@traderspro.com. Thanks, everyone. Bye now.